Now we want to broaden out the discussion to talk about housing, mortgages, refinancing, and everything else. Dani Babb is also with us, founder of the Babb Group and author of The Accidental Landlord and The Accidental Startup, which is due out pretty soon, right?
But not accidentally. She's here on purpose.
She's here on purpose.
You're here on purpose.
I moved here on purpose.
Dani, I have a couple questions because we just said at the beginning of the show, I mean, there's a lot of news to get to, but let's just get to a couple personal questions about mortgages and the like, just to kind of open up the conversation. Larry from Ohio is asking, what happens when all the people Obama refinances on their loan are in default again 6 months from now? Do you see that as a real worry? Is that a real concern with some of the government programs that are accessible for people that are in trouble?
Well, if it's anything like what the banks have been doing, then yeah, it is a real risk. Anywhere between 50 and 70% of the people that default the first time and get a modification re-default again a second time. Yeah. It looks like so far that number is between 20 and 30% when it's done by the government. So it is a lower risk, but it is absolutely a concern.
So what is, since there have been a lot of government programs, has there been one government program that has stood out to you that's been really helpful for homeowners? You're shaking your head no. That doesn't look helpful.
Not. No, no. The best thing is when the borrower and the lender get together and work it out themselves, because those are the two people that have the skin in the game. When the government gets involved, it's completely pointless. And the banks have been using these programs, like Wachovia, for example, has said we're going to roll out new programs based on Obama's plan in the next coming weeks. That story has been heard now for months from home borrowers,
right,
from buyers, and so things are just kind of sitting stagnant and stale right now.
What do you think, John, where we are in this whole housing downturn, and if any of this government help is helping?
I tell you two anecdotes. One is I spent 2 days last week in Geneva working with a group of foreign investors.
What are your frequent flyer miles like?
15 million at the moment. But I spent 2 days with a bunch of guys who, if taxpayers saw that meeting, they wouldn't like it. We were arranging placing assets around the world. This is sovereign wealth fund money. And we have an opportunity to place $1 billion in assets guaranteed by the American government, where we're going to make 30% a year return. That's what's opening up this market. There are hedge fund guys all over the world descending on this asset market. The federal government will guarantee 90% of the loan, no recourse to you. Two coupons and you're in the money on these things. Doesn't take a genius to figure this out. But so the banks are coming back, and the bank stocks are coming back because of it. The FASB rule change on Friday really changes the playing field on the accounting rules and the asset valuations, and on bank earnings in this quarter, by the way. And so this thing is heading back up. But basically it says if the government aims a fire hose of money at something, it gets wet.
Well,
it makes sense,
it does.
right?
This is now, let's talk about it from an investor perspective. John, maybe you can give this, and also from Dani, really focus on the housing sector. Ryan from Phoenix was asking how long are interest rates going to stay this low? I mean, Dani, do you expect them to stay low for a long time, especially with what John described about kind of these vultures coming in and swooping up some of these assets?
I don't think we're going to see it beyond the end of this year. I'm personally looking at refinancing every single property that I have before the end of this year.
How many properties do you have?
I have a few.
1 million.
I have a few properties.
Around different parts of the country?
Different parts of the country, yeah.
So does refinancing change depending on where you are in the country or the neighborhood, or is it generally a good rate right now?
It's a good rate right now. We're looking at around 4.61% for a 30-year conventional. It's when you get into the jumbo markets we have problems.
Yeah, because one of the properties you own, or at least one of them I know I read on your blog, was in California, right?
Yeah.
And you're worried about jumbos? You're worried about jumbos being a real issue here.
Yeah,
jumbo mortgages being
problem.
Above $729,000 in a lot of the country, or $417 depending on where you live, I guess, and what
more
the
than a garage
are.
in California.
Right, exactly.
Right,
so you're worried about this is the market, government's not going to help, and it could blow up, right or wrong?
Yeah, well, it is blowing up. My team and I called 19 banks, and of them, about 18 of them weren't doing anything for jumbo borrowers.
Wow.
And the under rule, or the under story that I'm getting from this is, well, why would we want to when the government's not going to buy the mortgage-backed security?
Exactly.
And so and also there's this stigma out there of helping the rich people, and so people who have a jumbo mortgage are rich in some parts of the country.
But in other parts, they were just someone that got in too deep, especially in California.
The overriding picture of Dani's story is the government has essentially created one monopoly bank at the top. Monopolies price things to make a lot of money. Bank pricing is changing now to make banks profitable, and that profitability is because it's all in the government loans, they're shutting off everything that they don't have to do to suck money out of the government. So to the extent you've got a jumbo or some other asset that's not part of one of these Doogie Howser, Tim Geithner programs, you are screwed.
Right.
And so it's going to open up, but it's going to make all sorts of unintended casualties along the way because of that.
Yeah.
And the jumbo loans, of course, are so much higher, even on the 5-1 or 3-1 ARM, adjustable rate mortgages, they're still so much higher than the conventional, at least a point, in some cases 2 points, with a point, which is 1% to close. And some of these banks now are requiring, like Comerica, I was shocked, they wanted $250,000 in other bank stuff, checking, savings, CDs, before they'll even look at you.
Well, the government argues, though, I mean, and to the point that there's been a big complaint about the government programs, which has been, you know, some people have to fail, just like some institutions need to fail, although we haven't necessarily seen that.
The ones they choose.
But that's their point. You know, that's what they say, that there's going to have to be. We can't bail everybody out. So if you had this, you know, we're leaving the guys with the jumbo mortgages aside,
so
unfortunately.
Right.
So that's what's going to happen. So what does that mean?
If they admitted that out loud, this would be way better. They are not admitting that. They're saying they're opening up the market for everybody. The banks won't even tell you that they're shutting this stuff down.
Right.
They'll lie about it.
On their websites, it'll say, we're doing jumbos, this is the rate, and you call them, and they say, I'm sorry, but we've discontinued the jumbo program, or we're only going to 40 or 50% loan to value. You show me a jumbo borrower that has 50% equity.
But what about we keep on hearing, too, here, the real, you know, community banks or the regional banks? What about going to those if you have a jumbo mortgage, or you have one that when you're turning to your main mortgage, you know, provider? Is a community bank a good option because they're more personal? Does that work?
It used to. Up until 2 weeks ago, I was having much better luck with those. We did a slew of calls, mostly in the Southern California and Arizona regions, of community banks as well, and they're in exactly the same boat, only they're just flat out saying no jumbos, period.
So what happened in those 2 weeks? Is it the government plan?
Geithner happened.
Geithner happened.
They opened up.
T-shirt. You could just see it. Geithner happened.
No,
2009.
This is Doogie Howser of finance. They
does resemble him.
They blew a hole right through the middle of the assets with these programs. The banks are making money hand over fist out of these programs. They are not going to do chump change business with you or me.
You said overseas you're seeing hedge funds come back into the market. There's some sort of business activity. So, I mean, are you negative about Geithner's plan totally, or is there parts of it that are working?
I think Geithner's an idiot, and I think this whole business of nationalizing the banks, monopoly banking system, I think they're totally doing this the wrong way. Nevertheless, this fire hose of money is on. Yeah. And when it's on, bank reserves have increased by 800% since September. When it turns specifically depends on when people unclench their buttocks and are willing to buy things and do things, because we're all scared, right? Yeah. There's a chart. I don't know if you can see it, but it's
we can try.
We can send it to us. We can probably put it up in our little live blog here.
Federal Reserve Bank of St. Louis publishes data every week from the Federal Reserve Board. They publish data on currency holdings by people. Yeah. The $20 bills in your pocket. That amount of money went up by $80 billion since September when Lehman failed and everybody got scared. $80 billion was equal to total bank reserves for America before that. So people have put that money out to put in their mattress. When they turn that and start putting money back in the banks, that's the green light. That's when people are going to be okay. But as you see from that picture, that is not happening.
So we can't see the picture, but the picture goes straight up.
Brian, anywhere we can put it that we could show it on TV. There's one other person besides Jen and I, although two besides Jen and I in the studio. It's the internet, John. Come on.
Right.
Watch this. We're going to zoom in on it, and this is going to be high-tech stuff. There it is.
Hey, there it goes.
All right, go play Professor Robles. So your point is on that chart. Now you can actually show people. Yep.
That's what happened after Lehman failed last summer. People said, screw it, I'm taking all my money out of the bank, or most of it. Yeah. I know a plumber that took out $25,000 and put it in a coffee can. I know another guy, there's 1,000 anecdotes, but basically the number is that $80 billion of cash were taken out of the banks to put in people's pockets and coffee cans since September.
And a lot of those people are going to want to buy homes in the jumbo market. They're not going to be able to get a loan.
Absolutely.
Yeah, speaking of back to things, let me go back to what Jenna brought up with as one of our viewer questions about interest rates a moment ago. We're going to speak to Amy Hoke about Market Watch about this, and I think in a little more detail. But it just seems like, just generally, if people are asking now, is now the time to buy? These kind of general questions people want to, and one of the reasons they seem to be holding out is because they think well, it's only going to get better for the buyers, right? Prices are going to keep going down. Maybe rates will keep going down. What do you tell people who are on the fence and aren't sure whether or not they should jump in now or wait a while?
It depends on the market they want to jump into.
Yeah.
You know, the Sun Belt states are ones that I'm actively watching myself to try and see at least 2 quarters of consecutive price stability. So what I would tell people is to use city-data.com.
Is it like city, like a city?
City, yeah.
City-data.
And if you go there, you can look at this. You can look quarter by quarter at median home price. And when you start to see some stability over a couple of quarters, I think it might be a good time then to jump into that particular market. That's one of the indicators that I'm using.
Give me an example of a market where that works, that strategy works.
Well, I hate to use Fort Myers again because I just got nailed for this one, but you know, it showed 3 quarters of consecutive loss still, meaning you're not going to want to jump in there. So you're going to want to wait until the prices are stable in an area.
Yeah. So you really have to. I mean, this makes sense. I mean, it makes sense for all markets. It's so easy to throw out this advice to people, but you really have to take what someone says, one of us says, and then go home and do some homework. Because especially real estate, it could
buy houses one at a time.
Right. It could be different next door, more or less.
You've also got Oregon, Idaho, places where boomers are moving from and going to, or could potentially be strong markets in the next decade. Those are some I'm looking at. Idaho, Washington, Oregon. They're leaving Colorado and going to Idaho. Why? Who knows? But
and the transactions data being reported now include the value of deals people are doing in foreclosure. So they're artificially low in that sense. They're sort of garbage prices. And those are being cleaned out at some point. Danny would know better than me. But at some point, when that stuff gets gone and you start having more normal transactions, those indexes can move.
Interesting stuff. Yeah, I think it is city-data, right? .com.
Oh, sorry. I put
Ryan
slash.
in Phoenix.
Thank you,
Hot
Ryan.
Market has just put up the correct link.
He
so
corrected
guys
me.
could
He was the one that was asking about interest rates.
He was
Ryan's
earlier
on
on.
it.
So
he wants to buy in the next 3. Here, let's use Ryan as the example. He was sharing with everyone that he wants to buy in the next 3 months. That's what he wants to do.
In Phoenix?
Let's ask. Brian, you have to weigh in.
Danny wants to sell. Let's make a deal.
No, you guys get 10%.
A call.
Right.
No, we'll leave it out. Just email me, okay? TheBabbGroup.com. No, we have another interesting phenomenon happening in the housing market, and that's house trading. In today's market, 6% what you're going to pay to a realtor is a huge deal. And 6% can make you really competitive in your price.
Right.
So a lot of people are just going buyer to seller and doing direct transactions.
Here comes the realtor mail.
12:35 in New York, so 2 things have to happen. You have to go to Fox News.
I do. I have to go talk about the NCAA.
Fox News. Really?
Yes.
Is that what you're hitting?
Sorry. Yeah.
That's a good tease. You watch Jenna Lee talk basketball.
We're going to talk about it in 15 minutes
we
here.
Are. And Danny, you got to go, right? Danny Babb, thank you very much.
But you can see both of them right together.
You for a while.
I can hang. You can do ship
on Saturdays, right? You guys can hang out together.
Saturday, 12 to 2. Entrepreneurs, bring your questions. We're trying to help make over business.
For people who want to stop waiting for the government and get off their butt, light the blue flame, and start their own business.
Get out of cubicles.
Real people calling in.